So tonight's session, it's going to be basically on options, right? Now, a lot of you would have a bit of interest in options because options have been a bit of a focus to, I'd say it's been a bit of a subculture, maybe even over the past while. Certainly a big renaissance in American markets around options trading. It can be some pretty gruesome stuff that you see coming out over there when it comes to the types of risks that people are taking utilizing options. But the reason why they're able to utilize that with options is because they're so flexible. It doesn't have to be like that. In fact, we encourage you obviously not to jump on those kind of meme stocks or do that kind of meme trading. The young kids are calling it nowadays. So instead, we're looking to teach you on how we trade, which is a much more sensible and practical approach. So let's get stuck into it. Now, one thing I actually forgot to mention was on your screen, you should have like a question and answer box. You can see I've got my colleague Connor on there just telling me I'm all good for sound. But if you have any questions, they'll pop up here for Tim and I, and we'll be able to answer them. Should be like a little Q&A box that you can ask your questions. Now, most of those questions we'll probably answer at the end there, right? But we might answer as we go, and we like to hear your commentary as well. So you might be wondering who we are. If you're new and you don't know who we are, I'll run through that in a moment. If you're joining us again tonight because you've watched a few of our other webcasts, you're already a client, well then you already know who we are and what we do. But essentially, there's a couple of sides of the business. There's Trader Circle and there's Emerald Equities. Now, Trader Circle has been around since 2005, so what's that? Quite some time, 16 years. And our focus really is to support and educate traders, really. So we're traders who support traders. That's kind of our mission statement in one sentence, right? What we want to do is we want to provide the best service we can, full service that we can to our clients by providing general advice only, and make sure they're well educated and well equipped for trading shorter term styles of trading. Emerald Equities, on the other hand, or Emerald Financial, is more focused on medium to longer term investing. So we've built a fantastic stock screener and scoring. If you wanted to be able to build a portfolio, that's something that we could help you with. We have a few different structured portfolios as well, if you kind of just wanted to leave it to us. I guess that way we cover both aspects of the market, and it's not necessarily about doing one or the other, right? You might feel that you're looking to trade short term and generate an income stream or become a part-time trader, that kind of thing. Perhaps something to do in retirement as well. Keep your mind active, generate an income stream in retirement. That's Trader Circle covers that. But you also want to make sure that you look after your capital growth as well, your investments, your nest eggs, and that's Emerald Financial, right? We've separated them because they're two different identities, but it's largely managed by a lot of the people of the company. So moving on, what we're going to do today, I'm just going to skip through a lot of this, is we're going to talk about what's going on in the market. We're going to talk about options and option strategies and reporting season strategies, right? I'll explain what that means in a moment because some of the banks are going to be reporting soon, and we just went to a reporting season. So it's not going to be a huge focus, but it's a strategy that I think you could use in the upcoming bank reports. Otherwise, tonight's focus is purely based on options and the various strategies that we like to employ. My name's Caro. That's my goofy picture on the right. I haven't updated it. My hair is like 3 times as long as that. I honestly can't remember the last time I had a haircut. It would have to have been before my birthday in April, maybe. Yeah, I don't know. Look, it's getting ridiculous, that's for sure. I don't think Tim's put his webcam on tonight for a very similar reason. I'm half Italian and Tim's Greek, so our hair can get away from us if we don't get regularly groomed, and we're not in a position to do that at the moment. So it's kind of stylish, but it's probably not appropriate. I've been with the business for about 8 years. Tim as well, actually, maybe 9 now. God, I keep saying 8. It's probably 9 or 10. Quite some time. In fact, the majority of the people in our business have been there for a long time. We don't burn through staff. We don't burn through clients. We're just a small business who, I guess we've all got plenty of experience is really the point there. We've all developed our skills. My purpose in the business is to really help educate clients. So what I do is I'll help train and mentor you if you're a beginner. And I mean, even if you're a seasoned trader, you might want someone to help refresh you on some key areas of your trading, like picking direction or strategy or risk management, those types of things. And I'll be your guy for that. I'm also an advisor that sits on the trading desk. So when you're ready to start trading with real money, I'm there to kind of help you execute orders and give you trade ideas, help you price up strategies and do all those types of things. Tim, on the other hand, is the head of the trading desk. So Tim's kind of like my boss in that sense. He basically manages all the advisors on the trading desk, helps clients as well, of course, with their positions. He started out doing the head training job that I do now as well. So he helped teach me and a few of the other people in the business, and has a wealth of knowledge, not just when it comes to trading, but also investing. He's helped build up Emerald Financial, has a lot of different fingers in pies, and just manages the business overall. So I guess it's quite good to be able to hear from both sides. Someone like myself who's more focused on the education side of things, as well as Tim, who is heavily experienced in markets as well as training. So hopefully you enjoy tonight. But before we get stuck into it, it's important to understand that any advice contained in this presentation is general only, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. So we're gonna run through options. I don't want to get bogged down in what an option is, because I wouldn't say it's particularly important when it comes to making money, right? If you think about everything that you know, probably a fraction of it actually makes money for you, if you really think about it, right? And you can maybe even apply the same theory to trading, right? So I'm not going to get bogged down in options too much as to exactly what they are, but I am going to explain it just so that you have a rough idea. So with options, there's actually two types of options, right? There's a call option and a put option, right? So you can buy and sell call options. You can buy and sell put options, all right? Now, the reason why we trade options is because ultimately they provide flexibility. I mean, in all honesty, that's all it kind of comes down to, including the leverage. Flexibility in the sense that we can trade different market conditions. So, obviously we can trade bullish conditions, but we're in a position where we can trade bearish positions as well as sideways, and multi-directional positions as well. So let's say that we thought the market was going to go sideways, right? It was going to channel for a particular period of time. We can trade that view. Let's say we thought the market was going to fall. We could trade that view, right? Let's say we thought the market was going to fall and or go sideways, so it was going to drift down over time. Like September's maybe a bit of a bearish month. We think the market's going to go sideways to down or something like that. We could trade that view as well. So options provide us basically an opportunity to trade any market condition, and that's a huge advantage. For the obvious reason why it's an advantage, but also a reason that you might not have thought. When you can trade any market condition, it actually allows you to analyze the market with less bias, right? Because if your only strategy is to buy low and sell high, right, or to only do bullish trades as you could with shares, then that's how you start to really look at the market. You only look at it through that lens. It's kind of like the saying, if your only tool is a hammer, then everything is a nail, Whereas when you trade options, you can trade different market conditions, then you actually, because you don't care whether or not you do bearish strategies or bullish strategies or cyber strategy, you just trade what you see, you're actually more likely to look at the market through a less biased lens, if that makes sense. The great thing about options as well is they provide leverage, and they have lots and lots and lots of different choices of leverage. Okay, and what that ultimately means is that you can use less money in order to make more money compared to buying and selling stock, right? But the flip side obviously is that you can lose more money as well. And so you do need to understand what you're doing. And we highly recommend that you attend one of our courses. I mean, look, that sounds very self-serving, but go and attend a course. I don't care if it's not ours, but go and learn properly how to trade options, right? And you got to think for a moment here. If you want to be able to generate an income stream, then you want to be able to make a fair amount of money from the market, right? That's probably another way of saying that, a fair amount of money consistently from the market. If you want to do that, then that's a high risk venture. Yeah, I mean, it is, isn't it? You want to make more money from the market, well, you need to risk more money, or you need to enter yourself into riskier positions. But that's okay. It's not that that risk is unmanageable, but it certainly means that you need to be educated properly, and it certainly means you need to be able to practice and gain experience first. Okay, I really, if there's anything that you kind of took away from the presentation tonight, it's that. It's not that you have to be scared of them, it's just that you got to learn properly, right? One analogy I use is this car driving one. I've used it plenty of times, so if you've heard it before, forgive me. But if you wanted to get from A to B, you could walk it, right? It's going to take a long time, but you could get there fairly safely, right? It also doesn't take a lot of experience or a lot of knowledge in order how to walk. You learn at a fairly young age. You fall over a few times, but you get the general gist of it. For me, that's like share investing. You'll get there eventually, no problem. But if you want to make money quicker, or if you want to get from A to B quicker, then you could drive a car. But driving a car is way more complicated than walking, right? It's way faster, but it's way more complicated. Should you be scared of driving a car? Well, you should if you don't know what you're doing. But if you learn and practice, then it's going to make it a lot more manageable. It's going to make it a lot less scary, and the risk is a lot more manageable. Can you still get into crashes? Absolutely. You're better off getting into a crash when you're walking than you do going 80 kilometers an hour, right? So I hope that analogy kind of makes sense, where, if you want a vehicle, pun intended, to get from A to B that's quicker than walking, then you really do need to understand exactly what you're doing, and that's what we're here for, right? That's what we're here for. That's what we've been teaching. That's what we support our clients doing every day. Anyway, I digress. So with options, like as I said earlier, there's two types of options. There's a call option and there's a put option. Now, we're just going to quickly run through what a call option is. And again, I honestly, it really doesn't matter if you understand this or not. It's not going to help you make money. It's, do you need to know how your car works? Do you need to know that really, I mean, do you need to know the carburetor and the timing belt and the ball width, and do you need to know any? I don't know any of that stuff, and you can still drive. Like, it doesn't actually affect you. And options are like that to some degree. I mean, it's a good idea to understand how they work eventually, but in the beginning, it's not going to necessarily help you make money. So if this bores you and your eyes start to glaze over, I completely understand. Don't worry about it. It's actually not too pertinent. So as you can see on your screen, a call option is actually kind of like a contract. So it's a little graphic that I made. It's meant to represent terms of a contract, right? Every contract has terms, doesn't it? The terms of a call option is the right to purchase CBA stock. In this circumstance, it's a CBA call option at a particular price, which in this case is $76, until the 29th of December, which is the expiry. And the cost of this call option is $2. Now, you could trade a call option, not just on CBA, but you could trade a call option on BHP. You could trade it on AGL. You could trade it on AMP. You could trade it on Fortescue Metal Group. You could trade it on Wesfarmers, Woolworths, QBE, IPL, ILU, LLC. These are all kind of big blue chip companies, albeit some of them not very healthy at the moment. You can trade all call options on all these kind of big blue chip companies. There's about 80 of them, I think. Maybe it's 70 now, right? It fluctuates. Sometimes they get some and sometimes they come off. In this particular circumstance, we're just looking at CBA. So the CBA call option ultimately means that we're allowed to buy the stock at $76 until the 29th of December, right? And the value of this call option is about $2. Now, in fairness, CBA is trading closer to 100. And when I wrote this slide, it was trading closer to like 78 or 77 when I wrote this slide. So this is trading, it wasn't too long ago, but it was a while ago, okay? The value of this call option would be much more expensive. It'd probably be closer to like $16. So let's not get into that. All right, so the buyer of the call option agrees to pay a premium to the seller, right? And that makes sense, doesn't it? When you buy something, you pay for it, right? In this case, they pay the value of the contract, which is $2. That allows the buyer to purchase the CBA stock at 76, right? They have the right to do so. They don't have to. No one's got a gun to their head, but they can if they want. because they've paid the $2, they now have the right to purchase CBA stock at 76. And they have that right until the 29th of December, right? So the contract has a maturity. It has a finite life. After the 29th of December, all bets are off. There's no more contract between the two parties, okay? Now, think about it from the seller's perspective. The seller receives the $2, don't they? And that makes sense. When you sell something, you receive money. That makes sense, doesn't it? So the seller's going to receive $2, but why should they just be given $2? Right? Well, they now take on an obligation to sell their stock at 76. Right? Because remember, the buyer of the call option gets to purchase CBA stock at 76. Guess who they're purchasing it from? It's not the market. It's not CBA itself. They're not picking it up off the ground or going to the ASX and going, give me my CBA stock. They're purchasing the CBA stock from the seller of the call option. Okay. Now, again, you know, if you don't understand that, it's fairly straightforward when you actually think about it and when you look at it. It's just super wordy, and it's a new concept for a lot of people. Again, I don't really want you to get bogged down here. That's not really the point of tonight's webcast. But just to be clear, if you were to come along and do an options course with us, this is you will learn this, and I'll spend months reiterating and reinforcing and teaching you this stuff. Okay. Now, the put option is simply the same as a call option, except it's the right to sell. So the original, with the one that we just looked at, the call option, that was the right to buy CBA stock. The put option is the right to sell stock. And again, if we bought a put option on CBA, it'd be the right to sell CBA shares. And with this particular option, it's at a $78 strike price, and the expiry is the 28th of June next year. So again, and the value is $1.50. Now, again, in real life, the value of this option would be far greater considering where CBA share price is and how far out the expiry is. But again, I don't want to get kind of bogged down there, right? But ultimately, the buyer of the put option, they pay a premium, right? In this case, it's $1.50 to the seller. Because they paid that $1.50, they now have the right to sell their CBA shares at $78 if they want to. They don't have to. Again, no one's got a gun to their head. But if they want to, at any point between now and the 28th of June, they get to sell their stock at $78 if they want to. And the reason why they get to sell their stock if they want to is because they paid the $1.50 at the start of the deal. Okay? Now, let's look at it from the seller's perspective. And again, you could be on either side of this if you wanted to be. You could be the buyer or you could be the seller, also known as the writer. Now, the writer is going to receive premium from the buyer, right? They're going to receive the $1.50 that the buyer paid. And again, that makes sense. If I buy a put option and pay $1.50, that means someone else is selling the put option and they receive the $1.50. But why should they just be given money? Well, it's because they're now taking on an obligation to buy my stock. Right, remember, I paid $1.50 and I get to sell my stock. Who am I selling it to, though? Who am I selling my stock to? Am I selling my stock to CBA directly? No. Am I selling my stock to the market? Nope. Am I selling my stock to Bob, the neighbor? No. I'm selling my stock to the person who sold the put option to me, right? And they have to take my stock at $78 if I ask them to. And the reason why they have to is because I paid them $1.50. They have that obligation until expiry, which in this case is the 28th of June. Now, I've been doing this for a long time, and I've been teaching this for a long time. I'm going to tell you, that's the best explanation for an option that you're possibly going to get without using like metaphors and stuff. So if you just want to clip what I just said, use it as a soundbite and play it to your mates or whatever it is, that's honestly the best example of a call and put option the best explanation of a call and put option that you're going to get, as basic as it comes. Again, I do want to add the caveat that you really don't need to understand that in order to make money, especially as a beginner. Okay, so why do we trade ETOs? I just want to refresh your memory. We can trade them for uptrending stocks. We can trade them for sideways trending stocks. We can also trade them for downtrending stocks, right? So if we thought, okay, I think the stock's going to go, I mean, you can trade counter trends. You can trade anything really. Any market condition you can trade options with, right? You can utilize an option strategy to profit from your view. Yeah, except for, I think the market's going to go every direction. which is cheating. You can't do that. So I want to just visualize a few different strategies for you. Okay, I just want to cover a bit of ground here before I bring on Tim. You can do directional strategies, which are going to profit from a directional movement, right? So what that means is that I think the stock's going to go up. That's a directional trade. I think the stock's going to go down. That's a directional trade, right? That's a directional trade. So one thing you can do in this particular circumstance is you could trade a call option, right? A call option, again, gives you the right to buy the stock, but that's not, again, necessarily, you don't need to really understand that. If you buy a call option, you'll make money if the stock goes up. But you'll lose money if the stock goes sideways, or you'll lose money if the stock goes down. So if the stock goes nowhere, you're slowly going to lose money. It's called time decay. If the stock goes down, well, you're wrong, and of course you're going to lose money. But if the stock goes up, you'll make good money, and your profit is uncapped essentially. We only like to do directional strategies when we're very certain of a bullish move in the coming weeks, I guess, coming days to weeks, depending on what your expiry is. Does that make sense? Okay. Now let's look at a little bit more of a sophisticated strategy. This is a directional to sideways strategy. So one that we could implement is called a bull call spread. And if set up correctly, you can profit from a bullish movement, but you can also profit from sideways movement. So if the share price decides to take its sweet time, right, which let's be honest, it can do, especially in the Australian market, then you'll actually benefit from that. You'll actually slowly make money over time as the stock, you slowly make money over time as long as you're in the trade, right? And the stock doesn't fall too much. If it does fall, you will lose money. All right, I can't give you every direction. I can't give you a trade where you make money if the stock goes up, down, or sideways. You could maybe there is one strategy where you could maybe grab the risk-free rate, like 1% or something like that from the market, but I don't even want to get into that. Right? There's no free lunches. I'm sure you guys can respect that. So again, you can profit from a bullish move. You can profit from a sideways move. And the huge advantage to that is that, aside from the obvious, is that you can actually wait for your direction to play out. Like, how many times have you entered a trade and you weren't right at the initially, but you were eventually right? How many times have you been in that position? We're in that position a lot, right? Where we'll enter a bullish position, the stock might track sideways for a little bit, and then eventually it'll go up, right? But that happens a lot because our market is just naturally whippy, right? Well, I mean, when it's on, but I'm sure you'll agree. We also have a strategy just for sideways movement, right? And what we essentially do is, and this is called an iron condor, right? Look, traders are weird, right? We create very simple names, and then for some reason, something happens and we decide to name a strategy an iron condor or a butterfly or something like that, right? Might have something to do with wings, I don't know. But yes, we have a strategy called an iron condor, and essentially what we do is we pick a defined range that we think the stock is going to trade in. We don't care if the stock goes up a little bit. We don't care if the stock goes down a little bit, right? Actually, this strategy is the bull put, apologies. So this is a different strategy. This is called something that we would implement is typically called a bull put. You can do it as a bull call, but we typically do it as a bull put. I'm not going to get stuck into as to why. But ultimately, what it means is that you can profit from bullish movement. You can profit from sideways movement, but you can actually also profit if the share falls a little bit, right? Not too much. So your profit range is anything that's blue and green on this chart. So if it falls a lot, you're going to cop it. Don't get me wrong. But if it does kind of, as long as it just stays above that support level, as long as it stays above that line, right, then you're golden. Right now, obviously, as you gain something, right, for example, this trade will make less money if the stock goes up than the previous 2 trades, right? Because you're now gaining more wiggle room to the downside. Right? So as soon as you gain something with options, you give up something else, right? Just like anything to do with the market, really. Okay. This is a strategy that we employ during volatility events. Okay, so when we think the market is going to have a spike, or well, a particular stock is going to have a spike in volatility, and there's a couple of times a year when a stock has a spike in volatility. When do you think that is? Well, it's around reporting, right? So this is a strategy we like to do in reporting. This is a strategy that our clients have did in the last reporting season. And it's something that we might recommend coming into the bank soon, and certainly something that we'll continue to recommend during other reporting seasons. And it essentially makes money if the stock goes up a lot or if it goes down a lot. It just loses if nothing happens. You can't have weak movement. You can't have this slow drift higher. You can't have a slow fall, right? It needs to be a hard move up or a hard move down, one or the other. Okay. And again, around reporting season, this is a really well-utilized strategy. So, and we've run webcasts on that before. If you want to go check that out, you should be able to find it on our YouTube page. Just type in Traders Circle Emerald Financial, Emerald Equities, and it'll come up with the videos on this particular strategy, because we like to teach it to clients, because again, it's a great strategy to use around reporting season. So it really takes the direction picking out, because you don't know how that report's going to go, do you? I mean, even if you had inside knowledge, which is completely illegal, but let's say you did, you don't know how the market's going to interpret it, right? Because I've seen good reports where the stock has absolutely flown, and I've seen great reports where the stock has absolutely crashed. And equally, I've seen terrible reports that have made stocks fall, but I've also seen terrible reports that have made a stock rise, right? So you don't really ever know how a stock's going to interpret the report in the short term, right? You could speculate, and that's totally fine. You're welcome to. But what's great about this strategy is it takes out that kind of guesswork. You just need the movement. So you'd only do it on stocks that have historically moved quite significantly in the past, not pitter-pattered around. All right, that's the kind of brief explanation on options. Tim's actually going to jump online tonight and actually show you some real examples of trades that we've suggested directly to our clients, right? Showcasing a few of these strategies that are relevant and up to date and all that type of stuff. Really practical, right? Not just theory. If you've got any questions, type them in, and I'll jump on at the end and explain the course that we run to teach you options. So please stay on for that as well. All right. One question that we've already had is from David, which is, why is American option better, worse than European? What I'm going to do is I'm going to hand that over to Tim, and then I'll answer that. Well, actually, you know what? I might let Tim answer that. You happy to answer that one, Tim?
I'm more than happy to answer that, Caro. Thank you very much. And thanks for that quick intro there. Just give me a moment, everyone. I'm just going to share my screen, and then we'll get stuck into it. Okay, so Caro's giving you just a quick explanation of options there, which is fantastic. And what you've seen there, by breaking it down into directional to sideways, and multi-directional, is that there's literally hundreds and hundreds of different option strategies out there, right? You can buy books with all these different variations of strategies with weird names and the rest of it. Basically, not all of those strategies that you read in books will work on the Australian market. That's number one. Number two, if you try and get your head around all those strategies, it's going to take you years. So what we've done through the years and years of education is we've simplified it. Okay, and we've brought it down into a structure where you can look at the market through different lenses, right? So you go, okay, well, the market looks like it's going to be fairly volatile. It's going to take a bit of movement, and I think it's going to move up. all right, I'm going to go to the directional section, and or I think the market's going to whip around sideways for a month. Okay, then you can take it across to the sideways section. Okay, so what we do in our education is we teach people and we give everybody what we call our strategy cookbook. And you can see here on the first page of that cookbook, basically we've done exactly that, right? We go, okay, well, how much dependence on movement is there? Okay, 100% is that you're really directional. You think the stock's going to move a lot, right? And then directional to sideways has a little bit less reliance. And then you got different strategies that rely less and less on actually getting the movement correct. Right, so we teach you this, right, and you can see here the terminology: directional, directional to sideways, sideways, multi-directional, right? So that terminology we use throughout our education, and it just helps simplify it. What we actually then do is we have different technical rules for the different types of strategies as well. Okay, so we've got directional rules and we've got rules for sideways strategies as well. Right, so this is how we educate, and this is why we've started off showing you this way. It just simplifies things, guys, right? What we can teach you in 3 months will take you years doing it by yourself, okay? And you'll still come out the other side not really knowing how to look at the market and applying this stuff properly, right? Okay, so to answer that question real quick before I dive into some of these strategies and dive into the market, American and European style, really quite simply, the difference only comes in on expiry, really. So a European style option, you can only be exercised on expiry day, right? You cannot be exercised before expiry day. American style options, you could be exercised at any point of time. Now, only time you have exercise risk is if you have a sold position. So you've sold to open your position, you have an exercise risk. So there's no real benefit, okay? There's nothing better or worse about it. It just depends on what you're trying to achieve, okay? So if you're doing a strategy called a covered call, where you've bought stock and you've sold options over the top of that stock, some people want to be exercised and be happy to be exercised, so they'll use an American in that situation. Somebody that doesn't really want to be exercised until expiry day would go for the European style option. Now, when we educate people, we sort of say to people, look, for your spread strategies like the bull put, bull call, aim to use European, because as a trader, I don't want to be exercised. I'd much prefer not to. I much prefer to have the control that, to take that exercise risk away. Because all I want to do is buy and sell the options. I want to get into positions, into strategies, and out of strategies. I don't want to be exercised as a trader. So I always aim to use Europeans for my sold legs as much as I can. If I can't, that's okay. I'll still take it on, but I'll just be wary of certain conditions where exercise risk is high. We also teach that in our courses, and then you just a lot more aware on controlling that exercise risk. So David, look, I hope that sort of answers your question. There's no better or worse. It's just understanding the differences and where to apply European style option and where to apply the American style option. All right, so that was going into something a bit more advanced, but let's just take it back to basics again. What I like to do always when I'm doing these webcasts is just start with a bit of a market view, okay? So then that way you can get an idea of how we like to look at the market through different lenses. Now, anytime that I look at the market, I always look at the XJO, which is the top 200 stocks of our market. And the reason why I use this index to look at the market is because I can actually trade this index using options, which we often do. The XJO options on our market are the most liquid options, which means it's very, very easy to get set in the market. It's easy to get filled, okay? And we'd much prefer to use XJO over a lot of other things if we can, if the opportunity arises. Okay, so what you'll see here, guys, if I zoom right out, okay, I'll go out pre-COVID. You can see the big COVID pullback, okay? One of the most aggressive move I've ever seen in the market from the time I started 11 odd years ago. Crazy stuff, guys. That was a huge move very quickly. The quicker it falls, though, generally speaking, the quicker we'll make it back up, right? You go back and look at the GFC. It took a year for the GFC to happen, really, like from a market movement point of view. And then it took us, I don't know, I think it was like 8 years, 9 years to make that back up again. This move happened in 2 months, and it's taken us about roughly a year to get back. Not even a year, was it? No, there's almost, yeah, that was probably about a year by the time we got back up there, wasn't it? Yeah, almost spot on a year. There you go. But yeah, so look, there's no surprise here. Right? There's really no surprise. We've been in a roaring uptrend. Okay, so this uptrend is defined by high peaks and higher troughs, and guess what? We're still in an uptrend, guys. Okay, although we've seen a little bit of a pullback, right? But these pullbacks are very, 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 common. Have a look at every sort of move up is always met with either a sideways movement or a pullback into trend. Okay, so very, very common for the market to shoot up, take a breather, shoot up, take a breather, shoot up, take a breather. And it has been consistently doing that through this whole trend. And that's perfect, right? From a technical standpoint, this is the type of market we want. We want that consistency where the market shoots higher, pulls back, and it's doing that consistent same pattern over and over again. If you're in that type of market where there's consistency, guess what? There's much higher chance of success, much higher chance. So it's been a fantastic market over the last 12 months, right? The volatility for us is a really good thing, especially for options traders, because we get to trade the upward movement, okay? We get to trade the sideways movement, and we get to trade the movement when the market wants to correct back down, if we can pick that one. We tend not to do many bearish trades in an uptrending market. It's just we prefer to stick with the momentum, which is up. I think we've only done maybe 2 bearish trades this whole year. But we've done a lot of sideways trades. We've done a lot of very directional trades, and we've done a lot of sort of sideways to directional trades, depending on our view, right? So that's the lens we're looking for here, right? The trend is up, okay? But what phase are we in that trend right now, okay? Do we have that break higher, that continuation signal where the market looks like it's going to continue flying up? Or are we in a downward trend, counter trend phase? Or are we in a sideways phase, okay? That's what we're looking for as an options trader. We're no longer just stuck to going, okay, is the market going to go up today? Right? I actually don't care where the market goes. It's up to me to set my strategies to suit the current market condition. And if the market condition changes, it's up to me to change that very, very quickly, right? And that's what it's about. It's not about right or wrong. It's about predicting what the market's likely to do next in a sense. But it's more so just, if the market goes into a certain phase and starts showing certain technical signals of that phase playing out, we adjust our strategies for that, make as much as we can out of it before the phase changes, right? So this market's been ideal because, you're getting 2 months of sideways, nice big strong movement up. So we're in sideways positions, we're staying in sideways positions, we're making money out of our short iron condors through here, and then the market breaks, we're closing out of our short iron condors, and we're getting into more directional stuff. And we're making our money out of our directional movements. Okay, we're starting to find a top here. We're going to get out of our bullish directional trades now, and we're back into sort of sideways, right? That's the lens. All right, that's the lens. All right, so before I show you strategies, I'll just show you a straight call option, right? Something just straight off the bat. Kara showed you what a call option contract looked like before, okay? There's a lot of detail in that. And, even for me, when I first learned this stuff, I think it probably would have taken about 4 times explained to me before I fully respected what that contract meant. So if you didn't quite understand what Kara was talking about there, that's fine. That's normal, right? It does take a few explanations for it to really start digesting. And for most people don't actually respect what options are unless they go out there and do a few trades and just see the dynamics, see things moving. Now, what we do is we use an options calculator to help demonstrate the risk and reward, okay? To demonstrate what happens over share price movement in time, okay? So that's what I'm going to do tonight now. I'm going to show you guys the options calculator and show you how the profit and loss changes from strategy to strategy, okay? And it'll give you a feel for what options are about and the power that you've got trading options over any other financial instrument. Okay, so I'll start with the Bank of Queensland call option. And the reason why on doing that is it actually fits most of our rules for a bullish trade. The only reason why we didn't go there today is because the market's in a sideways phase, and that's why I was saying it fits most of our rules. But we wouldn't be wanting to trade a directional trade right now because the market's in a sideways phase. So we're doing sideways strategies. And our bull put, our sideways trade that we wanted, wasn't pricing up today very well. So we didn't do anything here today. But I'm just going to show you this as a demonstration on how just buying a straight call option works. Okay. So I've gone out to a November expiry. Okay, it's plenty of time. $9.50 strike. All right, which is actually a little bit above. I'm going to usually go below. Okay, so we'll just put that below the current share price, which is then I'll adjust that risk back down a little bit. Okay, so we're talking about 2,400 risk. You can risk whatever you want, by the way, guys. You can take that down to $500 if that's what you're comfortable with, right? So what this matrix is showing me here, okay, is share price movement up or down. Okay, so down, up, and then over time. Okay, because time is a major factor for options. Right, there's something called time decay that we occur in options. And that time erodes and erodes more and more and more as we get closer and closer to expiry. So you'll see here if the share price doesn't budge, okay, and I do nothing, I just ignore the trade, I do absolutely nothing. You can see as more and more time goes and I get closer to expiry, the loss grows, okay. And if the share price stays exactly where it is and hits expiry, I'm going to lose $1,300. Right, that's what that's telling me here. All right. And then if the share price shoots up, and this is on 1% increments, okay, so if it shoots up 5%, I'm going to make almost $2,000. But if it shoots up 5% and it takes 11 days to get there, I'm only going to make $1,800. So you can see time's a bad thing, right? With just buying a straight call option. And you can see why we call that a directional trade, right? Because you got unlimited upside, all right? It doesn't matter how much this stock flies up, you got an absolute unlimited upside on a straight call option, okay? You can see here if it moves up, was it 16%, you're going to make $7,000 off that 2,400 investment, right? But that's not what we're aiming for here, guys, right? I'm just demonstrating how risk reward can happen on a call option. The good thing here is it's not unlimited downside, right? There is unlimited downside option strategies out there, guys. All right. Yes, unlimited risk strategies. We don't teach them. We actually don't allow our clients to trade those strategies. Okay. We've completely banned unlimited risk strategies for a few reasons. Okay. One, the broker we use doesn't like them and doesn't want to do them. And two, we don't believe in them. Okay. We really do not believe you need to take an unlimited risk with options, right? We can always limit risk and still find a really attractive trade. So we don't do anything naked, guys, okay? For any of you that understand what that means, right? No unlimited risk trades. So you can see here, you can drop 16%, you lose 2,400, which is what I said the risk was before. But you're unlimited upside, okay? So the stock kept running and running and running, the profit just gets better and better and better. That's a straight call option, guys, right? You can see why we call it a directional strategy. Sideways is going to hurt you, okay? You do not want to be sitting there for a month waiting for this thing to move. You want it to move quick. You want signals that it's going to go up quickly, okay? So that's a straight call option on Bank of Queensland, right? We thought the profitability was a little bit tight going into the resistance level, and sideways market, guys, it's been very, very whippy. In these sideways markets, you get these nice bullish signals, but they tend not to eventuate that well, okay? So we tend to just steer away from these types of strategies while we're in this type of phase. The type of strategy we do use in this type of phase is what we call a short iron condor, okay? You can Google that. You'll see the strategy pop up, be explained in many, many different ways. There's 4 different options used to build this strategy, okay? I'm not going to go into that today, right? But these are the 4 options we use. This was a strategy we recommended out to our clients. The risk on this trade, the suggested risk that people amp that up a bit, right? People that will do 3 times that amount. We've got people that just do that amount. This is the suggested risk because we want to make sure it's worthwhile after all costs and everything, right? So basically, you're risking 4,200. And with this strategy, okay, you wanted to keep it between two levels, right, until the 2nd of September expiry. So we got in on the 20th of August, okay, and the expiry was the 2nd of September. So 20th of August, 2nd of September, how many weeks is that? That was pretty much 2 weeks, right? 2 weeks in the trade that we had to keep between those two levels. So if I bring the chart up at the time, and no, that's a horrible chart, guys. Sorry about that. I will go show you this on here. So we're just going to go back in time real quick to the 20th. Okay. I just want to demonstrate why we went for this trade. Okay. So the market had shot up, had then pulled back. Okay. Pulled back very close to a key level of support here. All right. 7,400 was a very strong level of resistance in the past, support through there. Okay. And basically, what has our market done, right, for the last 12 months? I had shown you that before on the XJO. Market goes up, pulls back, bounces again. Or the market goes up and it tracks sideways for a month or so. Okay, so the market had gone up, had pulled back. It showed a couple of signs of going sideways here at 74.60. So we decided that was the time we were going to jump on. At the time, like I said, we wanted to stay between two levels, right? One level was 73.50. And we thought that was enough movement. If the market was going to go sideways, it was going to stay sideways in that range. The top level is 76.50. Okay, right, it was the other level we had to stay below. 76.50 is all the way up here. All right, so we made a statement at that point of time. Okay, that was going to stay between those two levels for 2 weeks, and it did exactly that. Okay, so we found ourselves out to the 2nd of September. Pretty cruisy trade, guys. Didn't challenge us once. Okay, did not challenge us once. We were never nervous in this trade the whole time. Right. So what ended up happening for the the very grateful and happy ones that jumped into this trade is they made it's not the profit. It's here. There it is. $1,800. Okay. So when we deliver our strategies out to the clients, we always deliver a matrix here so they can see what the risks are, okay, and what the rewards are on the trade and what we're aiming for. So they would have gotten in and they would have come out with an $1,800 profit before costs, okay. So you can see here, very, very important strategy, guys. We're probably doing one of these, probably do this strategy at least 15 times a year. Because some months we'll do it a couple of times, right? Maybe 10 to 15 times a year we'll be using this strategy when our market goes into that sideways phase. And, if I really zoom out and go back in time, have a look at that. Have a look at how often our market does this, right? That one there, that went for, sorry, that was in the wrong spot. Give me a second. This sideways movement lasted for 155 days. That's a long time, guys, from June through to November. Yeah, that's a long time for the market to be just whipping around doing nothing. If all you're doing is trading directional, you're stuck trying to trade these little tiny movements in here, right? Or slim pickings, right? You're looking for stocks that are moving. I'll keep going back in time, guys. Look how often our market tracks sideways. Yeah, it does it a lot. Yeah, so you have these uptrending phases. So that particular year, we wouldn't have been doing many condors, right? But these particular years here, those condors are our best friends. So see how we're looking at the market in a much different lens, right? If you listen to a CFD trader, if you listen to even a trader that just trades stock or mini warrants or even crypto, right? All you're trying to do is pick the upward movement. You are so restricted, guys. You're so restricted. And this is why we love options so much, is because you've got that flexibility of looking at the market in a different lens, looking at stocks at a different lens, right? All right, so I'll flick through. So I've shown you so far a very directional trade, which is the call option. I've shown you a sideways strategy. I'm just being wary of time, so I'm just going to flick through and show you a few more. This one here is what we call a bull call spread. Now, this strategy is directional to sideways. And the reason why we call it directional to sideways, I'll go straight down to the payoff here. And once again, sorry, these images aren't the best. Got to make sure we're a bit more careful with that. I'm just going to quickly show you in here. I'm just going to quickly build this UI9. Sorry about this, guys. Usually I'm a bit more organized than this. I just want to show you this quickly. So 19th of, this is 24, 23. I clicked on the wrong one. Sorry, guys, bear with me. 22nd of June. Sorry, wrong trade. I want to be showing you the one we did just recently. I clicked on the wrong one. I can't show you something that's already expired, guys. That's the problem here. Just give me 2 seconds and I will bring this up. Sorry, my computer can sometimes go a little bit slow when I am presenting and loading a bunch of pages at the same time. Give me a second. No, that doesn't want to come up for me. Oh, here we go. That's better. Okay, so this is the Woodside trade I wanted to show you, the one we opened only a few days back, right? Okay, so reasoning we wanted to get in, well, oil had jumped back above $70 US at the time, okay, and then also we're starting to see some technical signals for this to jump up to that next resistance level. I'm going to go into too much detail there. What I want to show you is this, right? The reason why we call this a directional to sideways trade, and this is probably a little bit clearer than the other one. Might be even just clearer on that previous page that I was on, because I think this is just showing it a little bit better here. Okay, so basically, as this goes up to resistance, if it takes time to get there, you can see if it gets there day one, I'll make $1,100. But if it gets there a week later, I'm making more money, right? So with the call option that I showed you earlier, the sideways hurt you. With this particular trade, the sideways is enhancing my profitability. And this is what we love about this, right? Is because if it, and often our market doesn't move quickly, right? That's just the bloody reality of our market. It takes a long time. It grinds, yeah? It often grinds more than what it does just racing higher. And this trade, it's great if it pops up because we take our profit quickly. But if it takes a while to get there, perfect, because it's just going to enhance my profit as we go along. The trade-off here is I don't have unlimited profit. I have a limited profit now, but also have a limited risk, okay? So with this particular strategy, okay, suggest a risk of only $2,000, as you can see there. But if it goes up to our resistance level, okay, we're making about $1,100 to even $1,500, okay? So we're talking about, you know, more than 50% profit to 60, 70% profit, depending on how slowly it takes to get there. So how I've thrown that dynamic on the head, haven't I, right? Where the call option before, I had to get that movement quickly. Now here, it's actually beneficial if it takes a while to get there. And that's the big difference here between strategies. And this is why we teach the strategies the way we teach them. Directional, meaning you got to get that movement quickly. Directional to sideways like this. We're happy for that. We need the directional movement to make money, don't get me wrong, but we're happy for it to go slowly. Or we go sideways, completely sideways, right? Where we don't think the stock's going to move a lot at all, right? And another good example of that is CBA. And this is a trade that expired today. Okay, see here, 16th of September expiry. We opened this trade on the 24th of August. So you would have been in this trade. It was a bit of time. Okay, so this is probably one of the longer bull puts that we would do. Normally we'd try and do 2 to 3 weeks. This was, you know, 1, 2, 3, yeah, 3.5. So it wasn't too bad. It might have been a little bit, might have been 4.5 weeks, right? But regardless, going into this trade, guys, okay, we just needed CBA at the time, okay, to stay above 98, all right? You can see here on the chart, these charts aren't fantastic when they're blown up, but you can see here there's a beautiful uptrend. It raced into its report, and then after its report and into its dividend, it pulled right back. Okay, came back to trend, heaps of support here around 100. The other thing we loved about CBA is they've got the off-market buyback that's happening in October. So we know that once that selling was finished, those people that wanted to get out, once they were out, there's a lot of people sitting in there waiting for that off-market buyback to happen, right? So that is even more of a fundamental reason to do this trade. And if I could do a 2-week bull put on CBA in the coming days, I would, right? I wouldn't do it after the October deadline on the buyback. Be leaving alone after that. Okay. So there's a few reasons why we were looking at that. So getting into this trade, guys, like I said, we just had to keep it above 98, right? Which it did today. If I go over to CBA now, it expired there. And it didn't really challenge us much, this trade. Okay. So we got in around here. Okay. And it just smoothly went sideways and held that $100 level, right? It was just one of those perfect trades. It was fantastic. Didn't have to do anything. We just glanced at it twice a day. We meet in the morning, we meet at night, we have a look at it and go, yeah, that's fine. Not doing anything we have to worry about. But you can see here perfectly sideways. And guess what? CBA, once again, is one of those stocks that it moves large. When it's done moving, it has a little bit of a pullback and it goes sideways for ages. And whilst it's going sideways, you try and milk these sort of bull puts and condor strategies as much as we can until something like this happens. Okay, so because we don't win them all, right? We only keep winning them until it tells us to stop doing that strategy. And then we'll lose on a trade when that bullish momentum happens, and we quickly flick into that more directional type strategy, right? So I don't win them all, okay? Obviously, we don't aim to win them all because that's just impossible. For instance, we did a condor just recently, right, where we actually ended up losing money on. All right, that was one that it would have expired today, but we had to close it out because it breached our sold leg on our bottom end of our trade, right? So it breached on this day here, okay? So that day there, broke 74. We closed out, okay, and we would have lost probably about $1,200, $1,300. Considering the previous trade, people made 1,800. That's okay. We're all right with that. You know what I mean? Now we're sort of in limbo with XJ, just trying to work out whether we go again for that condor or whether we just leave it alone. We're probably at the phase of sort of leaving it alone. Got a few clients that have opened bull puts below 73.50 now. Okay, with the view that this trend is going to hold and keep creeping higher. All right, but from a recommendation point of view, we're very cautious, right? Very, very cautious what we put out. Okay, so CBA, as I said before, good profit, guys. Okay, people that got into that trade made about $1,400-$1,500. Okay, all right, you can see what the profit is on expiry day there, 1,500. All right, so good result. All right. There's a Rio bull call. I've already shown you a bull call. I'm just wary of the time there, guys. So I might just sort of say open it for any questions. So whilst you're writing in your questions into Q&A, if you have any, guys, before I head back over to Caro, just once again, we really simplify options, guys. Okay, if you go out there and read the books, there's so many strategies, and a lot of those books are being written by Americans. Okay, options are huge in America. Like honestly, they're massive over there. For some reason, they're not so big here. Okay, I actually don't know why they haven't taken off as much here as over there. I think the Americans are a bit more risk takers than what we are, right? A bit more risk adverse. Okay. Guys, look, options are only as risky as you make them. All right. They get a bad name because they can have unlimited risk. I don't see options as big risk anymore. All right. They are deemed high risk strategies. They are deemed a high risk product because you can do high risk strategies on them. The strategies we teach, although they're higher risk than equities, okay, they're not unlimited risk, guys. All right. And if they're done properly, you reduce that risk dramatically, right? If you follow a set of rules, if you follow our cookbook and how to set those strategies up, you only get in when the numbers work, okay? You reduce the risk dramatically than just going in blind, okay? So yes, options are risky, but you're going to eliminate a huge amount of that risk following a set of rules, being disciplined, and following a cookbook on how to set those strategies up, right? And that's what we're all about, okay? Yes, David, absolutely right. So David just asked a question: can directional trades be used with puts as well as calls? Yes. So if I want to trade the downward movement, okay, and my example before was Bank of Queensland. I can do a similar strategy. If I thought the stock was going to fall, I'd buy put options. Okay. And if I say bought 50 put options here, be risking 2,600. Okay. I'm not going to go into too much of why I picked the strike that way, right? We'll be here for a while. But now you can see I've turned it on the head, right? If the stock goes up, I lose money. Because it's a straight put option, okay, which is a reverse of the call, okay, I lose on a sideways, but I make money if the share price falls. And I've got unlimited profit down to the share price going to zero on the downside. So the more it falls, the more I make, okay? But on the upside, I am limited to only losing 2.5 grand if I do nothing. What you need to remember with trading, and this is the biggest difference between trading and gambling, guys. With gambling, you go red or black, you win or lose. You can't pull out. Once that roulette ball hits, no more bets. You can't change your bet, right? Thing with trading is I've got all the way out to November to choose when to get out. I can get in today and get out tomorrow and lose $50, right? I can get in today, the share price goes up 2% and I'll lose $500. I haven't lost 2.5 grand until the trade expires in November, right? And that's the difference between trading and gambling, guys. We've got rules for everything. We've got rules for when you get in. We get rules for when you're getting out. We always limit our losses as much as we possibly can, but also giving the trade enough time to play out. And that's where the fine balance of having a good set of rules comes into it. It's a probability game. There's maybe a little bit of luck in there sometimes for some people, right? But this game is a game of probability. It's a game of skill, and it's a game of discipline, right? And yes, so this just shows, David, you can trade the downward movement by buying a put, okay? Just as if you want to trade the upward movement, you'd be buying a call, okay? So calls, straight call, buying a straight call makes money on the upward move. Buying a straight put makes money on the downward move. Okay. All right. So look, I hope I've done my job tonight. My job tonight was to demonstrate the power of options and what you can do with them. Okay. And I've hopefully demonstrated to you guys that we can simplify this a lot. Okay. Compared to going out there alone, reading books by yourself, trying to work out how you're going to apply this to the market. Our educator, Carlo Castellano, he taught me, he's been educating people for a very long time. I think it's beyond 20 years, right? He's been trading the Australian market for 30. He's been around a long, long time, guys, okay? And all he trades is the Australian market. So if you want to know how to apply options onto the market, onto Australian market, which is a little bit different to the US, right? Just a little bit, all right? You can apply what we teach onto the US, but what they teach in the US, you can't apply to our market, if that makes sense, right? It's just a different beast over there. All right, so look, I'm going to leave it with that. I'm going to hand you back to Caro. Caro's just going to explain a little bit more about what we do and go into a little bit more detail. And yeah, so thanks for listening. If you've got any more questions, please shoot them through to the Q&A box and we can answer them at the end of the presentation.
All right, so hopefully you can hear me. I'm just going to present my screen again. All right, so I'm just going to quickly talk about some of the services we provide. If you're interested in options, then we have a way for you to learn, right, which I'll run through in a moment. But let's say that you're already a bit of an options trader, or, well, you're not interested in options and you do want a professional team around you to support you in your trading. Then on your screen, we've listed just some of the trading services that we provide that we think will provide you an advantage in the market. So for example, we can provide expert trade execution. Myself and Tim and the other advisors, if you call us up, we can place trades for you. With options, that's particularly good because you don't just hit the bid and the ask, you get somewhere filled in the middle. If you don't understand what that means, that's okay. But if you trade options, you'll know what I'm talking about. So we can call up market makers and get good fills and things like that for options. But outside that, even if you're just trading shares or minis or other derivatives, you can call up and we can be kind of like eyes and ears for the market in some ways and tell you what we think, tell you what's going on, and then execute an order on your behalf. We can give you trade ideas and recommendations. In fact, we often do. We'll, if you call me up and say, have you seen anything today? I'll be like, oh yeah, go check out, this particular stock or these few stocks. There's usually a few that we're looking at each day. And we're happy to give you advice on, any kind of aspect of your trading. So you might call me up and say, hey, I've got a BHP trade on, or I'm thinking about doing a trade on Wesfarmers. This is what I think is going to happen. Can you help me price up a strategy, or what do you think I could do here? And a good portion of my job is giving you sound advice in that area. Does that make sense? So even if you're not looking for some education, which is totally fair enough, you might want to just open up a trading account with us, start developing a relationship with an advisor such as myself or Tim or one of the other ones, and we'll be able to kind of assist you with your trading. What really makes us different is that we, look, we're a small business. We've all been here for a really long time. We've been around for 16 years. And we're not really focused on acquisition in terms of clients. We're focused on retention. So ultimately what that means is we want to develop long-term relationships with you, where we don't just continually try to upsell you into things. We just want to be able to help you trade essentially and equip you and empower you to trade for yourself. So we focus on you as an individual as much as possible and try to tailor the learning experience to you. We try to give you as much attention as you need in order to be successful. And we don't earn individual broker commission. So if you call me up and say, do you think I should do this trade? It doesn't really matter. Like, my paycheck doesn't change on whether or not I say yes or no. Whereas brokers' paychecks kind of do generally, right? So they have an incentive to say, yeah, do the trade. That's just the reality of it. All right. So as I said, we run a course on options trading. Now, I wouldn't recommend this to beginners because it really just teaches you how to trade options, and options are very sophisticated. We do run one other course, and it's more focused on direction picking. We teach you how to trade a different instrument called mini warrants, and we have run webcasts in the past on mini warrants. So you're welcome to watch some of those recordings on our YouTube page, or you can give me a call and I can send you one directly, no problem. But yes, this is, I would say, more for a bit of a seasoned trader who already kind of is a bit established, knows how to pick direction, or has an idea, and has maybe not seasoned, but at least has a little bit of experience trading, right? And they're looking for an edge. So this options course begins with a 2-day face-to-face training session. Right now, typically we'd like to do it in our boardroom, and we're taking we only take in like 10 people, 8 to 10 people, something like that. That's all our boardroom can kind of fit. So we just do it in our office. You get to come in, say hello to the staff, see how we run things. We'll feed you, we'll give you manuals. But ultimately, it's just a 2-day session with Carlo Castellano, who was the co-founder of Trader Circle that Tim mentioned earlier. He has over 20 years of experience teaching and trading. He basically semi-retired now. He just trades at home, but still runs the courses. And so you're learning from someone who's not only a professional trader, but also a professional teacher, and that makes a huge difference. What we're going to cover on day one is just the options basics. So, some of that stuff that I covered earlier, looking at directional strategies like calls and puts, all right, and also looking at portfolio strategies like covered calls. Okay, so strategies that you can use in conjunction with your share portfolio in order to try and increase the yield, right, of your portfolio, or put yourself in a position where you can acquire stock perhaps a bit cheaper using sold puts, right? These are the types of strategies that we're going to teach you on day one. Day two is a lot more focused on advanced strategies. So that's about trading multi-directional views, right? Those are the strategies that, so a couple of the strategies that Tim ran through tonight, the ones that we like to use on a fairly regular basis. Those are the strategies that most sophisticated options traders prefer to use. So it's a fairly intensive 2-day course, and obviously we can't run it face-to-face at the moment, but we do run it online. And online, look, if you come and do the online course, what we do now is we say, look, if you don't feel like you got the full experience, you can come do face-to-face as our guest. Okay, take us up on the offer. We don't mind. We but again, we develop long-term relationships with our clients. It'll be good to see you anyway. But the idea is that it's almost a guarantee that we're going to provide you a great level of service and education in that 2-day workshop, even if it's online. So you'll be able to see Carlo's face, you'll be able to see his screen, his whiteboard, all that type of stuff. You'll have the manual sent to you directly, as well as the other physical resources. And then following the 2-day workshop, what we do is we give you 8 weeks access to our online portal for extended learning, right? Because you can't remember this stuff in 2 days. It's just, we have people, quite literally, we have like math professors come in and try to learn this stuff, right? And they don't learn it in 2 days. It's not because it's complicated, it's just that it's a lot of information. And so what we want to do is we want to entrench that information over the coming months, basically, right? And there's a few ways that we do that. Firstly, we give you access to all our online material. That includes things like trade recommendations. So if we see a trade that we like that fits the rules that you've been taught, right, then we'll put that out as a recommendation. So we'll send you a text and we'll say, hey, this is a trade that we like. This is how you can trade it. And we'll send you an email with all the analysis, including the chart and the payoff matrix and all the things that we've kind of run through tonight, except obviously in greater detail. And if you like the trade, then you can enter it if you want to. It's a good way to kind of start and dip your toe in as a beginner. There's also training videos that we've recorded that cover the core principles that you learn during the 2-day workshop. We run webcasts every day from 12 to 1, right? Monday to Friday, obviously when the market's open. Tim runs his webcast on a Tuesday. I run mine on a Wednesday, and the other advisors have 1 day a week where they run their webcast. And it's basically a live session where we go through the market and we look for trades applying these strategies. Right? Old clients jump on, new clients jump on, and we just go through things together as a group. My Wednesday webcast, which I ran obviously yesterday from 12 to 1, then half of that is really focused on options trading. So I actually go through a little bit of theory, but I'm really trying to, like I said, entrench the things that you learned during that 2-day course. I try to teach it a bit of a different way. And I basically, a lot of it's focused on education. If you can't attend those daily webcasts, then they're recorded and they're placed on the website that night. I think we're the only business in Australia that does that, by the way, a live trading webcast every day that the market's open. So, I mean, there's a few other resources like daily market updates and reporting calendars and that kind of stuff as well. During the 8-week period, we are going to run a paper trading competition. Basically, we just want you to paper trade, and we want to try and simulate real trading. So you get a bit of a demo account with a set amount of money, and you're competing against the other students in the class with you, and the winner gets a prize, right? Look, this type of trading is something that we don't want you to rush out and just go and do. We're happy for you to place a couple of trades. We really would suggest perhaps sticking to a trade recommendation or giving us a call and running through the trade first, right? And getting as much advice as possible before you do it. But ultimately, we want you to spend basically every day, just a little bit of every day, maybe 15 minutes, 20 minutes every day, whether it be at night or during the day, to find some paper trades and submit them into the competition. That way you can really practice and start to gather experience. Finally, and I would say most importantly, you get your own personal trainer. So someone like me who's there to really hold your hand and mentor you through this process. Okay, you can call your trainer as many times as a day as you like. And in fact, we really encourage you to be in consistent contact with your trainer, because the ones that utilize their trainer and the resources the most are the ones who are more likely to go on and be successful. Right? I've never had a successful client that was kind of nonchalant or didn't really bother. The successful clients that consistently make money are the ones who are in regular contact with us and the ones who are in regular contact with their trainer, making sure they understand these things and learn them properly. Your trainer's job, what we're here to do as well, is make sure you're not developing those bad habits that you're prone to developing as a beginner. Make sure that you're not making those silly mistakes that you're prone to making as a beginner. We're really here to just to kind of run point for you, answer your questions, teach you, educate you, and develop you further, so that when you're ready, you can start trading with your own money, right? And you can actually start achieving the goals that you set out to achieve when you first got into this all. Okay, so basically, I just ran through all that. basically the investment of the course is a deposit of $995, and there's just 2 more monthly payments of $995. So the total investment of the program is $2,985, and that includes the 2-day workshop, which is done online at this stage. It includes 2 months of online training. It includes the trade recommendations, all the resources, the technology. So we'll give you the trading platform and the calculators and everything you saw us use tonight. And more importantly, you get your own personal trainer, right? Education is not really a profit center for us. It's not something we make money from. It's a great deal of value in this workshop. And it's basically equips you with everything that we think you need in order to start trading the market practically. Okay, so if you're looking to trade options, you think they can give you an edge in this market, like we think you can, like we think they can, then perhaps consider coming along. But if you're a beginner, what I suggest you do is give us a call and have a chat to Jared, who's our market advocate. Jared, or I mean, you can talk to me as well. What we'll do is we'll kind of place you in the right space. So if we don't think you have enough experience for options, we'll probably point you towards our beginners course, which is a little bit cheaper than this course, but ultimately focuses on more the core foundations of trading. And if you'd like to watch a webcast on that, again, please feel free to go to our YouTube channel. The next dates for the options course are the 9th and 10th of October. So we run this course maybe once every few months, once every couple of months, maybe once every 3 months, that type of thing. With COVID, it's been a little bit tougher, right? We've had to delay, and well, I'm sure you guys understand. But yeah, like I said, we've only taken a small group of people, and we just want to focus on you as an individual as much as possible and give you as much support and training as you need. And so we keep the groups nice and small, and we don't run them very often. If you're interested, you can type book. Oops. You can type book into the chat, or if you'd like some more info, just type in more info. And if you'd like to watch the recording, well, we're going to send that to you tomorrow anyway. All right, well, we've gone, well, it's only 8:20, so maybe only 20 minutes over time, but I hope you enjoyed it. We really appreciate you guys jumping on tonight and listening to what we have to say about the market and the type of trading we like to teach and support our clients with. If you wake up in the middle of the night having forgotten to ask a particular question, by all means, please feel free to give us a call tomorrow or flick us an email and we'll get back to you. All right. All right. That's about it. Guys, thank you again so much. We really appreciate you taking the hour out of your time to listen to what we have to say. And we hope to see you on for our other webcasts. We do run other stuff like beginners ones, more advanced ones, very topical ones, like just around reporting season or any other kind of specific things that are happening in the market. So please keep your eyes peeled for that. And hopefully we'll see you all next time. But until then, good luck and happy trading.
Thanks everyone for attending. If you do want to have a look at some of our previous content, webcasts and stuff, I've just pasted in our YouTube link that has all our previous webcasts in there. So yeah, all the history's there, guys. Once again, thanks for listening in, and bye for
now. One more thing is you can jump on, if you go to our website, tradercircle.com.au, you can see it's here. I might just click Tim's link for you so you can go to see what our YouTube page is like. Just to kind of plug this a little bit more. That's me with my long hair and mustache. You can see there's a few other goofy videos there, but really, really kind of solid stuff, if I don't say so myself, especially the stuff that features Tim and Sam, or Sam and Mike. That's really, really solid stuff on the market there. And if you go to the Trader Circle page, you go to news, every Tuesday I write a tip on like I give you guys a trade recommendation basically, right? And for the most part, they actually do pretty well. So have a look at them, have a read, and keep up to date that way. All right, guys, again, thanks very much, and have a good evening.